What is up, guys? Welcome back to another episode from Coin and Capital. It's Chris, and you already know we bring the charts, we bring the data, the macro, the finance, the news, whatever it may be that impacts the price of what we hold. We talk about it and try and find some truth to deliver, make sense for all of us here in the markets. And today, we're back discussing crypto. We're going to talk a little bit about altcoins, a little bit more about Bitcoin, discuss some capitulation in the macro backdrop, and then finally finish it off with some more looks at the models I've been creating. So stick around. Let's get right into it. To kick things off with our crypto talk, I just want to show you guys a Bitcoin chart in two different frames here. So on the left, we have the Bitcoin daily, and then on the right, we have the Bitcoin weekly. Now, depending on what time frame we're looking at, the narrative and the feeling we get changes quite drastically, right? So in the daily chart does not look good whatsoever, okay? If we are looking at the daily chart every day, trying to gauge where we think we are in the cycle, what Bitcoin's price is going to do tomorrow, next week, next month, we're going to have a very bearish outlook. Because on the daily, we broke below the 200 moving average, and we've just been puking our guts out for the last month. Breaking through every support line, breaking through fair value gaps, liquidity pools, all of it, right? If we're looking on the daily, it's not looking good. When we look on the weekly gives us the most signal to noise ratio, contrast, whatever it may be, whatever you want to point to it. The weekly gives quality, high conviction signals 2 weeks, 3 weeks, month, 2 months, 3 months, half a year in advance. Okay, so on the weekly, we're still above the 200 moving average, meaning month to month trends going up are still intact. The weekly has tapped a fair value discount range where we've now seen buyers step in. Granted, I got these charts yesterday, so this is yesterday's price action. We've still kind of consolidated into the next few days as I'm talking in the future from when these charts were posted. But still, the weekly outlook, just from pure technicals, way more bullish than if we're looking on the daily, okay? So we need to be aware of this when constructing a bias, when constructing conviction, right? Because if I look on the daily, I would think the cycle's over, right? If I didn't know what I know, I would think we're cooked. I would probably realize some big loss, versus if I looked on the weekly, I would be okay. A little stressed, but okay. And then if we tap into the rest of the altcoin ecosystem, that being just Ethereum and Solana as broad proxy for the whole thing on what's going on, the scene itself doesn't look too bad, okay? Despite what just happened. Why would I say this? Well, when we look to Solana, below each chart we have the RSI from the previous video. RSI is oversold, overbought indicator. Very high quality signal here. When we look at Solana, the last time we had an oversold reading, Solana was $80, right? That was the deepest weekly oversold reading we had for Solana. Fast forward to this recent dump, we matched the oversold reading with a higher floor price, right? So we came down to the same level, and yet Solana only hit $120 compared to $80. That's a positive sign. The floor was raised in Solana. And, you know, when we look at Ethereum, the last time we had a similar oversold reading, we were floating around the low 2000s, right? Versus this time, when we had a similar oversold reading to that level, we sat around 2.5, 3,000. Okay. A higher floor on Ethereum. What we can derive from that is, in fact, there is a bid for quality altcoins, and that bid is increasing, whether it be institutional adoption through these ETF wrappers or just smart money buying things, front running what is to come. So what could they potentially be front running? Well, this brings me to the next slide of this video, bit of macro talk. Last video, we show this chart damn near every video here on Coin and Capital. The DXY dollar index, global liquidity proxy. When the dollar is strong, above 101 plus, bad, very bad. Headwind, risk off. Goodbye liquidity in the market. When the dollar is weaker, risk on, good for Bitcoin, good for crypto. That's all we need to know. Okay, what we saw in the dollar over the last 3 months was a revert back to the 200 moving average and to find discount, which means it trended up a little bit, providing the headwind. Now, last video, I had said we would like to see the dollar come down. It has since done that. Tailwind. Headwind to tailwind. TGA. We talked about this as well. The Treasury General Account. Checking account for the U.S. government. Also, liquidity gauge short term. When the TGA rises, bad for risk assets for Bitcoin and for crypto. So the TGA, due to the government shutdown, spiked up to $1 trillion, pulled all the liquidity out from the markets. There goes the floor. That is why everything dumped. Okay, TGA has recently started to draw down again. The government is back. They can spend their money into the economy, which means it's good for Bitcoin and good for crypto. Two very positive signs. The DXY, long-term liquidity outlook. TGA, little on the short term, okay? Which is why I think we're seeing some of this crypto pop, especially in equities, QQQ, S&P. So the NASDAQ and the S&P 500 are up like a percentage on the week. Good news all around. Now I just want to bring our attention to a new model in my terminal dashboard I'm working on for you guys. This model, the Reflexivity Model, measures depth, positioning, flows in the market, and is a great, phenomenal expression of narrative and overall consensus within the market, okay? Basically, what this reading is telling me, well, we have a few displays right here that synthesize the data into easy to read, easy to digest displays, so we don't have to worry about deciphering what this really cool chart is showing us. But what I really wanted to bring your attention to is this. The scenario leader from this model has been exhaustion. Okay, meaning positioning is exhausted, leverage has been wiped, right? Sentiment is finished. Okay, I was listening to a podcast earlier. It said the fear and greed is 16, below the FTX collapse. Okay, everybody is fed up. Crypto bros are throwing up, huddled in a ball on their bed, right? Nobody knows what to do, where it's going, because everybody has a day time frame, guys. Everybody's looking next day. next 2 days, where's price going to go? And when it doesn't go their way, they cry about it. But what if I told you there were ways where we can forecast accurately where price is going within 3, 6, 12 months? And that, my friends, is why I've been building these models for us, so we can accurately gauge things like narrative, things like liquidity, things like positioning, collateral depth, and overall market structure. And then distilling that into easy takeaways for you guys to better understand markets, where they're going, and position yourself to make money. Exhaustion is what we got from our reflexivity reading. Altcoins have found a higher floor while being at the same level of oversold as lower prices earlier in the year. Bitcoin, weekly discount trading above 200 moving average. DXY trending down. TGA on the slump, getting piled downwards, spent down, whatever you want to call it. It's going to take a while for this bottom to form, but I believe the bottom is in, and soon that reflexivity model will pick up into ignition when price and narrative align and we begin to rip to the upside. So that's where I think we're going based on data. Okay. I try not to get my emotions involved. I saw the charts. I felt the pain. And then I moved on. Consulted models, consulted data, came to my own conclusions, which is why I'm talking to you guys today. So, you enjoyed the video? Comment it below. Drop a like. Subscribe if you want more from this channel. I'll see you guys in the next one.